The most common way to achieve tax-free income in retirement is by holding your investments within tax-free accounts. So it really boils down to 3 different types of accounts that you can have. The first is an after-tax account. These are like your bank accounts, your non-qualified brokerage accounts, no special tax treatment there. The second is your pre-tax or tax-deferred accounts. Here you're dealing with traditional IRA, traditional 401k, 403b, SEP, simple, etc. Here you get a tax deduction for the money you put in, the investments grow tax deferred, and then all the money you take out in retirement is going to be ordinary income subject to tax on your return. The third type is the tax-free account. These are your Roth IRAs, Roth 401ks, and thanks to the Secure Act 2.0, now you may have the ability to contribute to a Roth SEP and a Roth Simple as well. And some would argue this isn't technically tax-free because you do not get a tax deduction for what you put in. However, the investments within these accounts grow tax-free, and the money you take out is tax-free as well and is not going to be included as income on your tax return. Okay, so you can see it's those Roth assets that are going to allow you to tap into your retirement funds without having very much tax consequence at all. But it doesn't just stop there. So because the Roth accounts keep your taxable income so low on your return, this actually can allow other types of income to become non-taxable as well. So for example, up to 85% of your Social Security income in retirement can be subject to income tax depending on your income. If your income is low enough, that 85% can go all the way down to 0. Qualified dividends, long-term capital gains subject to preferential tax rates at the federal level. If your income's low enough, you're going to find yourself in the 0% tax bracket on that income as well. Roth conversions. So let's say you have a taxpayer, 60 years old in retirement. We got a traditional IRA, Roth IRA, and his income is so low, he's not using up his entire standard deduction. So in some of these instances, we can actually convert some of his traditional assets into Roth assets and offset that taxable income using the standard deduction. So when you think about that, you got a tax deduction for that money when you put it into a traditional IRA. You didn't pay any tax when you converted to a Roth. And when you take that out of your Roth, because it's coming from Roth, it's not going to be taxable at all. So you never paid tax on that income. And on top of that, you just lowered the balance of your traditional IRA, which means you lowered your future RMDs, required minimum distributions. And for those of you familiar with the pesky RMDs, if you know, you know. What else? Medicare. So Medicare premiums are based on your modified adjusted gross income. They pull that right off your tax return. That does include certain types of non-taxable income. However, it does not include distributions out of Roth accounts. So lower Medicare premiums over the course of your retirement could save you a lot of money. So can you get tax-free income in retirement? Yes, you absolutely can, and you can get a lot of it. But you have to make sure you're taking the necessary steps during your working years to make it happen. So what does that look like? Well, you could contribute to a Roth IRA, you could do a backdoor Roth IRA conversion, you could contribute to a Roth 401k, or you could do one of our favorites, the mega backdoor Roth conversion. And of course, we're going to keep an eye out for those low income years to execute the Roth conversions as well. And I would be remiss to talk about tax-free income in retirement without at least touching on health savings accounts or HSAs. So a lot of rules here, but the gist of it is the purpose of the account is to save for future medical expenses, but it can absolutely double as a tax efficient way to save for retirement and produce that truly tax-free income. So a lot of information, a lot of different rules. Make sure you work with your advisor to come up with a personalized plan to maximize your financial outcomes and lower your lifetime tax bill.